Okay, so yesterday your guys' homework was to go to a chart it out based on what we've learned thus far, and do a before and after screenshot of what came about with the chart. So for the homework, there should be two screenshots back to back. That's 324. That's catching up. Yeah, it looks like JT went over a lot of guys' homework. Um, but just for example purposes, I'll show you guys what I came up with for today. So if we go to, let's see this really quick. Actually, I think I sent it in the chat. From Sire. Yeah, got it. So today, a lot of first lows ended up playing out. Funny, I don't know, it's just so ironic that I literally taught you guys yesterday, and that's what played out for the most part throughout today. If we go to, let's just start with NVIDIA. So looking at NVIDIA just for today's price action on a 1 hour, we can see that yesterday we had this high, and then we had this first low here that was finally placed. We know this is a first low because that's the pivot up, and this is the first low coming from this bullish range right here. So then from there, we got our manipulation right within these two wicks, and that gave us the next push higher and let us continue up to the upside. So right there, that would be ideal. Now, if we go down to a 15-minute time frame, we can see this 1 hour time frame manipulation also manipulated this 15-minute as well. So on a 15-minute time frame, you can see we manipulated this, popped up, sent us lower, just like that. All right. Another one, if we go to Tesla, you can see we had a shift to the upside here. Here's our first low. This is a first low because that's the first low placed after the bullish range. We pivoted up, pushed back down, new high. First low, manipulation here. And let's do one more. If we go to SPY, we can see yesterday we got a clean push. Here early this morning, we got manipulation, gave us a push higher, and then we pushed lower before moving up. Now let's go to a higher time frame. Let's try a, let's try a two, just playing through these time frames to find a time frame where we have a clear first low manipulation, but I can't necessarily find it here. But with everything that we're going to go over today, this right here will make sense. Okay, so we also yesterday went over bearish structure, and with bearish structure, how we have first highs. So it's just the complete opposite of our first lows. So with this, bearish range, first high gives the first high. It's literally the first high that forms in a bearish range. So a couple examples of this that we have are right here. So we have a low of a bearish range. There's the first high as indicated on that purple candle up. Then we have a new bearish range. Price ran up to manipulate this first high. And as we manipulated it, it sent us lower, just like that. Here's another example of where we have a shift to the downside. Here's our first high. Price runs up to manipulate that first high, sends us lower, just like that. Then another one over here. Low of a bearish range. First high right here. Price does all this just to manipulate the first high and then shoot lower, just like that. So you see how when you just understand where to wait for price to go to, which is our magnets, first high, first low, you don't have to be fooled by all this extra price action here, right? And we have a clear first high, so it's very obvious. Wait for first high, come in, dump, just like that. Any questions on first low, first high? Please review Tesla 1 hour. All right, let's go to it. Market structure shift, bullish range, first low here, manipulation. Just like that. Does a first low have to break structure or to be valid? Nope, it doesn't have to. So like for example, this first low here, in the manipulation, it did not break this bullish structure. But there could be a situation of where you have something like, say this here, you have a first low, price comes up, manipulate it, and then shoot straight up just like that. So this would be an example of price actually breaking structure to manipulate that first low before pushing higher. So that's why I say you never just use like, oh, this is first low, here's manipulation, I'm just going to buy. You don't necessarily use that because you never know how far manipulation is going to occur. So if you just took, let's say you bought calls right here, just because you said, oh, we're manipulating this first low, I'm going to buy. And let's say price dips down here. And then we shoot up. Now you see, you just took an unnecessary $4 move to the downside when you didn't have to do that. All right, so we're kind of going to get into the next part and to understand where to actually look for price to start reversing. Yep, so we went over this yesterday, our time frames that we're going to want to use. For day trading, 1 hour and 15 minute. But we always want to start off on the 4 hour just to see the overall, just to see the bigger picture. So remember the strawberry analogy I gave. We want to see what we're potentially going to eat. So we see it from afar. So let's say this is us. We see it's a strawberry. We see it from afar. Okay, it's a strawberry. Now we want to look at it a little closer. So now let's look at it on 1 hour. It's the strawberry. Okay, doesn't look like there's any bruises on it. Great. Now let's look at it on a 15 minute. Now let's look at it a little closer. All right, yeah, this looks pretty tasty. Good. Now, before we eat it, let's go take it over to the laboratory and let's put it on a under a microscope, and let's see what we're actually gonna eat. And now we see I got bugs inside of the strawberry. Now you understand we don't actually want to eat it. And then that's what the lower time frames are for. 5 minute and 1 minute. Just like that. All right. So now let's move on. So our next topic is kind of putting all of this together. Now, the first part of this is what we call this is where we get into, so here we have actual structure. So let's just start with bullish. So within bullish structure, to understand, or how could I phrase this? We'll just say, first step, understand structure. Second step is to identify where our trampolines are, where price can bounce from, or you could even say where price will push to continue structure. Jeez, I cannot type. So within bullish, we have demand zones. Literally think of this as where price can bounce from in bullish ranges. So, example. If we get something like this, we saw price bounce from this area. This is where price created a low to continue structure. Now our demand zone demand is always the last bearish candle before structure break to the upside, our market structure shift to the upside. And it's going to be the full entire candle. So if we had, let's say, red candle, red candle, red candle, let's say we had green candle, green candle. Let's say the break of this high here gives us this market structure shift to the upside. Let's say, boom, this green candle gives us that shift. Our demand zone is going to be the last bearish candle before the structure break or market structure shift. So therefore, since our shift happened here, our last bearish candle is this red one. So it's going to be the whole zone top to bottom. So I'll make this in blue. So the demand zone is this whole bearish candle. So if price comes back, ideally we would expect price to use it as a trampoline to push higher. All right. And what I said about the time frames earlier with like 1 hour, 15 minute and all that, it's the same thing. So if we go to something like this here we have a market structure shift to the upside. This is the last bearish candle before that shift. So therefore, this whole candle is our demand zone. Here's another example here. If here's our shift, here's our new bullish range. Therefore, this candle, this black one, is the last bearish candle before we got that shift. So that whole candle is our demand zone. So we want price to come back, tap into demand, and then move higher. I have a lot of examples for you guys, so don't worry. Right over here. This is the Roku example. So here we have bullish range. Here we have first low. Price runs down to manipulate the first low. We tap into this demand zone, and then price pushes higher. So now we see we have a structure break here. Here's the last bearish candle before that structure break. Here's our first low. Price runs down to manipulate the first low. We tap into demand, and then we push higher. Just like that. So it's just adding another piece to the puzzle. So with, actually I'm not even gonna open it. With SPY, or no, was it SPY? Tesla. So, actually it might have been SPY. Yeah. So with SPY today, you see here how we have a first low, and we manipulated the first low right here. Did everyone see that? First low manipulation. All right. So if this is, let's go to a 15 minute. So actually, let's go on 1 hour. So on a 1 hour, let's just say this right here is our shift. If we go down to a 15-minute time frame here, we can see, boom, here's our shift. This is the last bearish candle before our shift. Here we can see we have a demand zone right here. Price shifts, comes back to demand, pushes higher. Right here, we have a structure break. Here's the last bearish candle before that structure break. We have another demand zone here. Now we can see price manipulated the first low. We ran back down into this demand zone before pushing higher. All right, so if we wanted to get even more intricate, let's break this whole thing down. We see this is our highest point, and we can see it came from, let's go down to a little lower time frame just to see a clean move. All right, so we can see it came from this low. So once price broke that, there's our market structure shift to the downside. So then from here, let's go back to a 15. So then from here, let's just continue this, and we see bearish here, structure break to the downside. Right as soon as or I guess, yeah, right as soon as here, bearish. Here we have our first high. You can see we make a new low. We run up to make another first high here. So we manipulated this first high with this. This once again was a new first high. We manipulate this first high here. Sends us right down to demand to send us higher. So within this, you can see we had a demand zone. We continued bullish structure. Boom, we got a shift. Here we got a first high. We moved lower. Manipulated that first high. Price came down. Right into this demand zone. Then it sent us higher. So then let me just put all this here for you. Oops. Structure break, structure break. What is this? Here we got a shift to the downside. Here we have a first high. Here, I guess you could say, technically, this is a shift to the downside as well. Structure break. Right into the demand zone. And then we push higher. Here you can see this first low was manipulated here. So this is what I mean by a first low isn't the full story. A first low isn't automatically going to give you a home run move. Use the first low as like a magnet. So we can see we have a first low here. It's attracting price lower to send us to the demand zone to actually bounce off of. So if I was looking to take a position on something, I would start using something like this. Like I would say, okay, we have our first low here. It's clear price is going to head down. Me personally, and we haven't been through enough information yet to actually do this, but this is something that that I would do. So I could see, okay, here we have a first low. I see we just took out this first high. I'm going to take puts here, and I'm going to play this all the way down to this demand zone. And I'll use this first low as a target for my puts because I know when playing calls, or I guess you could say when playing puts, exit at places where price can reverse. That's all it is. So think about it like this. If we're in puts, what do we know could send price higher? Two things. First low manipulation, demand zones. So that's where we want to have our targets. So we can see here, first low for inputs, boom, this should be a target. Oh, we're still moving lower, perfect. This demand zone, next target. So as price hits this demand zone, I see we start pushing out. Okay, I'm getting out of this trade here. And then what I would do is I would say, okay, price is leaving the demand zone after we manipulated, perfect. Now I'm going to take calls and catch the trade up just like that. And that's exactly how I trade. So this diagram makes sense. All right, perfect. We're going to keep going over more. So let's just say we flip this upside down. Actually, no, let's not do that yet. Let's slow the brakes a little bit. Actually, I think my trade with SPX, yeah. Okay, so look at this right here. All right, so on a 15-minute with SPX, let's just spot out the obvious. Actually, I don't want to. Oh, no. Hold on on a second. Put this back. Okay, so this is the trade that I took right here. I bought puts here, I sold it down here. Now let me show you why I did that. So right here, you see how, what is this? I'm gonna just let you guys tell me. What's this red line? A market structure shift to the upside. So MS plus, right? So then from this, what's this blue area right here? Bullish range. Good job. This blue area is a bullish range. Now, within a bullish range, what are we going to have? There's two things. Two things that we're always going to have in a bullish range. What are they? Yep, first low is 1. What's the second? Demand zone. Okay? So first low we can see is here. And it's too, I think it might be too small. Yeah, it's too small to write. So we're just going to make it a different color. Say purple. We have our first low here. And is our demand zone going to be this orange area? Yes or no? No, and why not? Yep, exactly. It's not the last bearish candle. Whereas this one is right here. All right. So if I saw this, this is exactly what I did for this trade. So once I saw this, I could see, okay, we already manipulated first low. We came up, but looks like we're dragging lower. Where could we be dragging to? This demand zone right here. So as we go down, we can see all I was doing is catching the push down to this demand zone. And as you can see, I got out right before we hit this demand. And then what happened? We hit the demand zone and we completely reversed. Now, I didn't take calls on this trade. I just stopped trading after I caught this singular trade. But let's say I took calls here, right as we left this demand zone. And right here, you have another clean trade, 2 for 2. Caught puts down, caught calls up. Just like that. And all we used is first low magnet. We saw we had a demand zone. We saw where price was leaning towards. We just played the wave down. And I understood we have a demand zone here. That's where I need to look to get out of this trade. Why didn't I wait to the demand zone? I would say really only because you don't necessarily have to wait until we get there. Personally, I always like exiting right before because you never know how it's going to turn out, right? Price might come down. We might dig all the way down in this demand zone and then shoot up. Or we might just break it. Or we might do something like this. Or price might just come down here. We might tap and then literally take off just like this. So for me, I'm always safe than sorry. So I'd rather just get out as we're heading there. All right. And we haven't necessarily talked about entries yet. That's for another meeting. But I'm just showing you the overall picture. Demand is the low for the first push. Nope. Demand is the last bearish candle before a market structure shift or a structure break to the upside. All right, any questions on demand zone? Yeah, we can go over more examples. Definition of demand. Let me see. Oh, here it is. Just think of it like this. Where price can bounce from in bullish ranges. Demand is always the last bearish candle before a structure break to the upside or market structure shift. It's the full candle. So one of the examples that I showed you guys earlier, this was yesterday. Where is it? Oh yeah, this one. So you see here, bullish range, first low, price manipulated the first low into this demand zone, then we went higher. Just like that. So think of demand zone as literally just another part to a bullish range. Literally just like that. So like right here, we can see bearish range. There's our shift to the upside, our demand zone right there. Nope, so this has nothing to do with market open or anything. It's just structure. Literally just structure. When bouncing from demand zone, how do you determine your target? We'll talk about that later on. All right, so I just want to make sure that everyone understands demand. How do you know when to move onto a new first low, new demand zone? Really, if it's used. So, like, for example, if we have a first low, say here, and it's already manipulated, this is no longer first low. So now we can just kind of get rid of it. So for this, here we have a structure break, right? This is the last bearish candle. So on this time frame, that's our demand zone. Whereas if we go to a 15-minute time frame, it might show us something a little different. Now our demand zone is a little bit more cleaner. So we're taking the context of the 1 hour structure break and just finding a cleaner demand. So we see right here, that's the last bearish candle before we got this 1 hour structure break. Does that make sense? All right, perfect. All right, let's go over some stocks. All right, so we have this right here. Actually, let's just take a look at where price currently is. Actually, that's pretty much identical as what we just did. Let's do Meta. So over here with Meta, let's just take this bullish range. Here we have our shift. Here we have our first low manipulation. Now you can see in this 1 hour push up, we don't necessarily see a demand zone. All bullish candles. All we have to do is go down to a 15. So if we see, let's just say we said our shift is here. If we see that's our shift, our demand zone is right here. And now it perfectly makes sense as to why price manipulated down into here before moving higher. Did that make sense on how I just switched the time frames to find that demand? Perfect. So let's just say I wanted to take a trade on it. And mind you, it's not as simple as just finding a demand and just buying it. There's a couple more steps to it. But let's just say I did. Entry here, stop loss right below demand. And as you can see, this would be a very clean trade. So just like that. Nope, no indicators. We have not talked about any indicators at all. All right, Tesla, I think we already did this one. AMD. All right, on a 1 hour, we see our shift is here. Don't necessarily see any demand zone right there. So let's go down to a 15. And we see we have a demand zone here, right in orange. Now with this, we see price never came down and tapped demand, but we still went higher. Perfectly normal. Price does not always have to hit a demand zone, but there's our first low. Manipulated first low. We didn't tap demand, but we still pushed higher. That's fine. Price does not always have to hit demand. That's why I say every situation is going to be different. But the goal is to get enough repetition to where you start, seeing how things play out, and then you're not going to be surprised because you're going to be used to it. So now within this, we can see, all right, break at this high, structure break. The structure break came from this demand zone right here. Boom. Now we see price ran into demand, and as we did that, we pushed higher. Pushed higher, we push higher. Now if we go into a 1 hour, we can see this high gave us this low here. So we have a first low in demand. Price ran down to manipulate that first low in demand. And right after we manipulated it, clean move. Just like that. Did that make sense? Perfect. Now I think majority of these stocks, all the examples are going to look the exact same since all this price action is identical. Now also another thing to note, see how this is a first low here? And technically we have a structure break. So therefore the bottom of this demand zone is a first low. Price is more attracted to first lows. Think of first low as priority. So if you have a first low at the bottom of your demand, just like this here, chances are price is going to break this demand zone. Now, a demand zone is valid until price breaks through it. Regardless if it's a wick, a body, whatever, it still counts. It's still invalid. A demand zone is invalid if price breaks through it. This is an example. This demand zone, once it got broken through right here, not valid anymore. So let's see if we can find a reason as to why price broke through here. One, we know is because there's a first low. Now let's see if there's maybe a demand zone down here that pushed price higher. So here we can see on the higher time frame there, the break of this high is our shift. Our last bearish candle was right here. So let's make this green. So technically this would be our demand zone. Boom. So you see how I found the right demand zone to look at? Found the shift, found the last bearish candle. There's the first low that was at the bottom of demand. Price ran through that higher demand to go to this one, the demand zone that actually gave us that shift. And from that, clean move. So 15 minutes is great to understand. It doesn't matter the time frames. It's about the context. For this example, the context was different because we had a first low at the bottom of demand. So that pretty much means we can expect price to break that demand zone. So as we break it, we want to understand where are we, like how far or where can we expect price to go to. Now that's why I went to a 15 to actually find the demand zone that gave us this shift, because that showed us where price was headed towards. That makes sense. Is that two demand zones right after each other? Yes. So we just had this demand zone here. First low at the bottom, lower time frame, demand zone right there. So what about the black above it? This gave us the shift. All of this was inside of that higher one. I cannot understand how you found the demand zone on a 15-minute. Alright, so once again, here we have 1 hour time frame, right? There's our shift. Can everyone agree on that? This high, push this down to this low. There's our shift. So now from here, we can see we have a structure break. So within this shift, we got this bullish range. Here we have a first low here. Price manipulated it, pushed higher. Now since we have a structure break, that means this area here is a demand zone. Now when you have a first low at the bottom of your demand, chances are price is going to break it, which does what to our demand zone? When price breaks demand, what does that do to it? Yep, it invalidates it. So therefore, this one is not valid. So now from here, we need to understand, since we have a first low, if price manipulates this and pushes higher, like where are we going to bounce from? Where's our trampoline at? We have to go back to where we can have another demand zone. The last bullish range we have before this is here, from this low to that high. So we don't see it on a 1 hour. So let's go to a 15-minute. And we see here is our shift. So our last bearish candle before that shift is right there. So therefore, that's the demand zone we want to look for. And that's why price manipulated it right here, and then we pushed higher. So think about it like this. If you bought calls, let's say right here, because you're like, oh, we have this 1 hour demand zone, and price breaks it, you're going to exit the trade. You're going to exit the trade right where the real demand zone is, and then price is going to reverse. That's manipulation right there. That's why this low is a first low, the bottom of your demand, that's to manipulate you into thinking, oh, we broke this demand zone, we need to exit the trade. As soon as you exit that trade right on that break, that's when people like me are buying. So a lot of people had stop losses right there. So their trade was like this. Oh, there's demand. I'm going to set my stop loss, bottom of demand, and I'm looking for something like this, right? So as soon as price came down to break that demand zone, that 1 hour one, that's where you would have exited the trade, and this is where I would have bought the trade. And my stop loss would be right here. And I actually catch the move up while you don't. So does everyone see how that manipulation works? Yep, so it's really just about repetition. The more you practice, the more you spend time on the charts, the easier you're gonna see it. Cause it's like now, like I don't have to chart all this stuff out. I can literally just wake up 1 minute before market open up trading view, and then just go from there and find a trade. I mean, it's the truth. It's just all about repetition and practice. Just like with anything. Talking about big per. So yeah, this is like, I like honestly, like I probably say like 95% of the trades I take are always calls, because I just think price action is just so much more smooth when you're playing calls and puts. I mean, like you could probably even tell, like, look at how many examples there are of like first lows and all that stuff versus first high, right? Like with first high, there's not really a lot of examples, because overall, if we go to the market on a weekly, let's just go to a monthly. Overall, are there more opportunities to play calls or play puts? Which one? Nope, exactly, calls. So therefore, there's going to be a hell of a lot more examples of calls. All right, so I mean, like, even look at this. COVID 2020, structure break, demand zone, boom, price ran down to demand, push higher. If we look at price right here, break to the upside, demand zone right here. So price is now starting to push out of this demand zone once again. So now if we go down to a 4 hour, we see that's a weekly demand zone. Here we have a shift. Oh wait, I'm on a 1 hour, my bad. All right, so on a 4 hour, we are still in a bearish range. So we won't actually get a true shift until we break 570. So right now we're internal, but internally we're starting to build bullish price action. So here we have an internal break to the upside. We have an internal demand zone here. maybe we push higher. But on a 1 hour, we're bullish. On a 15-minute, we've been bullish since down here. So do you guys see that? On a weekly, we're bearish. On a 4 hour, we're bearish. On a 1 hour, once we broke this right here, now we're bullish. So we became bullish on a 1 hour at 554. On a 15-minute, we became bullish once we broke here at 551. On a 5-minute, we became bullish as soon as we broke 549. And the lower time frames we go, the lower that number gets. And that's because when price goes in a direction, it's going to show it on lower time frames first and then the higher time frames. Y'all starting to see the vision? Like I'm telling you, this stuff is not hard at all. Like literally whatsoever. It's so easy. So like, do this. 4 weeks ago when we first started, remember how I told you to write down where you are? Now looking back at where you were 4 weeks ago, do you see how much you've grown throughout like your knowledge of trading? Like who here has made a tremendous impact from day one to today? I'm telling you guys, the stuff that I'm showing you, I've been doing for years. And all like the only difference between me and you right now is that I have more practice. That's it. We have the exact same jump shot. We got the exact same crossover. The only difference is I've been doing it way longer. That's it. So all you have to do is just put in the time and practice and practice and practice. And then you'll get to that point. Now I'll tell you guys, the stuff that, like what you guys know already, I didn't start figuring this stuff out until like 2023, 2022, late 2022, early mid 2023. And that was already 4 years into me trading. So a lot of you guys that are new, you're ahead of the curve by far. Yeah, no, JT cannot hoop at all. Sorry, it was elite PG. Yeah, I averaged like 35 points a game, 12 steals, 9 rebounds. You can look me up on actually never mind, don't do that. Yeah, Dedrick, he knows. Or Dedrick, he knows too. But yeah, I mean, you guys right now, you have a very, very solid foundation. And then, let's see. Yeah, then after that, we'll get into, is it April Fool's? So yeah, so then we'll get into the opposite. So, I mean, same thing as first low. There was first high, same thing for demand. There's a opposite version. Then we'll get into that, and then we'll get into entries. Then we'll get into the fib tool and kind of like more risk management and whatnot. And pretty much we'll sum up a lot. Yeah, but now do you see like, if you only have like first low, first high, you have no way to like actually mitigate. It's like a demand zone, for example, would be a great way to have risk management within your trade, because you're knowing, okay, within this area, I expect price to bounce. If we break it, we invalidate it, I'm out of this trade. yeah. So that's everything for today's meeting. Let's see. Other than that, I will give you guys homework.